All right, so there are a lot of key players in the world right now. We got Bezos, we got Warren Buffett, we got Zuckerberg, and apparently they all three did some some shaking up the grounds things.
The stock market just had its worst day of the year. The Dow Jones plummeted over 700 points on Friday.
The worst day of the year so far. The Dow losing 748 points,
marking its steepest decline in all of 2025.
The Dow and S&P 500 turning their worst session of the year so far.
But here's what's even crazier. The richest people in the world are all cashing out at the same exact time. Warren Buffett, Jeff Bezos, Mark Zuckerberg, and even
They selling out of their own stock. Bezos and Zuckerberg are selling their own product.
Family.
A string of high-profile CEOs, founders, and heirs are selling a massive amount of stocks at their own companies lately.
They've all quietly been selling billions of dollars in stock over the last several months.
Warren Buffett, the best investor that has ever lived, is currently selling massive chunks of his portfolio.
Jeff Bezos quickly cashed out $8.5 billion in 9 trading days. Mark Zuckerberg also unloaded 1.4 million shares of Meta stock.
The day before the Dow plummeted, the CEO of America's largest bank, JP Chase, announced he's going to sell $233 million worth of the company's stock.
Jamie Dimon, chairman and CEO of JP Chase, made his first cash out and sold $150 million in stock.
These wealthy individuals are not just trimming positions. We're talking about massive, record-breaking sell-offs. Before we get started today,
whenever someone like them sells, regardless of how much it is, if they don't announce they just wanted to have some bread or they wanted to have something to invest in something else, people get worried and they start selling out too because they think something's about to happen and they need to protect capital.
Today's sponsor is Mustang Energy, stock ticker MECPF, but more on that in just a little bit. Warren Buffett, America's most prominent investor, has been a net seller and has been unloading shares over the last 9 consecutive quarters. That's a combined $166 billion worth of stock sold. But here's the kicker. He's now sitting on $334 billion in cash inside of Berkshire.
Warren Buffett, who's sitting on a record cash pile at over $325 billion.
Berkshire Hathaway's cash pile here. The cash pile has reached a record $325.2 billion in the third quarter.
He now owns $91.1 billion more of treasury bills than the Fed, and he won't say why. In his highly anticipated annual Berkshire letter, he did not say what he's waiting for. Instead, he said this was not a move away from stocks, and that he still loves investing. But let's be real, the rich, especially at that level, they do not make buying and selling decisions based on love and emotion. And Buffett is not alone in this. Jeff Bezos just sold $5.1 billion in company stock. This is the largest sale that he's had since he stepped down as CEO of Amazon. The question is, does he think Amazon's best days are behind it? Then there's Mark Zuckerberg. He just sold $500 million in Meta stock. And here's where it gets weird. Meta is doubling down on AI.
Meta doubling down on artificial intelligence. CEO Mark Zuckerberg announcing the tech giant is pushing deeper into AI.
Abandoning the metaverse. Does he see AI as too unpredictable? Or is this just a pivot? Even the Walton family, the heirs to Walmart, just sold $5.1 billion in company stock. Is this all just normal portfolio rebalancing? Or are they worried about consumer spending slowing down?
Yes.
We've all seen sell-offs before, but not like this, not all at once. Not when inflation is rising again. Not when credit card debt is at an all-time high.
More than $1 trillion. That's how much it would take to get Americans out of credit card debt right now in this country.
Cost of living increases due to inflation, paychecks not keeping up, and interest rates rising on credit card balances.
Not when corporate debt is hitting dangerous levels.
12 trillion in corporate debt.
This isn't just billionaires taking profits. In just the last quarter, Americans added another $45 billion in credit card debt. And with credit card interest rates sitting at 23%, paying it off is nearly impossible. We're seeing more defaults, more late payments, and people borrowing just to afford basic needs. So while the richest people in the world are sitting on billions in cash, the average American is drowning in debt. Something just doesn't add up. Billionaires do not panic sell. They move strategically and quietly. So the real question is, what do they see coming next? Let's connect the dots. Inflation is reaccelerating. Even after the Fed's aggressive rate hikes, inflation jumped 3% in January alone.
U.S. inflation rose to 3% for the 12 months ending in January.
Food, energy, housing all kept rising, making it harder for people to afford the basics. And tariffs and trade wars now entering the conversation. Trump's proposed tariffs on China and Mexico and Canada at 25%. And some believe if something like this does happen, it will push inflation even higher. And history shows businesses do not absorb these costs, they push them onto you.
86% of consumers reported feeling frustrated with rising grocery prices. And over a third said they have resorted to buying fewer items to save money.
How much of an increase could a consumer see?
You know, I think it's going to be a minimum of 5. It could be up to 15%.
As that's happening, a $2 trillion corporate debt wall is maturing in the next 12 months. Major U.S. companies are sitting in $2 trillion in U.S. debt. This debt must be refinanced at much higher interest rates.
Corporate debt is coming due in the next few years. Companies are forced to refinance at higher rates.
Or they could go bankrupt. In a worst-case scenario, pushing on those losses onto banks and investors. This means more layoffs and more budget cuts. And some companies could even go under.
Goldman Sachs says up to 300 million full-time jobs around the world could be affected by artificial intelligence.
Big brain thought. I wonder if part of the reason why Trump is pushing the initiative to, one, get the green card situation where only people with bread can come in is because they're going to be coming in with business ideas and jobs and opportunity. And then with the fact that they know they're implementing AI, they know a lot of jobs are going to go away. So they're looking for ways to try and balance it out. And the same thing with the incentive for people to avoid tariffs. If they just have branches or sectors of their company here, even if it's just a part of, like, say you make the product somewhere else, but it's just the base of the product, and then it gets painted, colored, and assembled here. And the point that I'm getting to is he's trying to come up with ways to incentivize people to start businesses here, partially because of the fact of how many closures are about to start happening. Is what I'm.
It's no surprise that big companies are cutting back, offloading debt, and racing to invest in AI. The entire economy is about to shift, and billionaires are preparing first. But here's another possibility. What if this isn't about an economic crash, but about where the smart money is going next? From Amazon to Meta to Google, the biggest companies are dumping billions into artificial intelligence, planning to spend a record-breaking $320 billion in AI alone in just 2025.
3 of the world's leading technology CEOs, and to announce the largest AI infrastructure project by far in history, and it's all taking place right here in America.
Are billionaires selling to reposition for an AI boom, or are they getting out before something bigger collapses?
Both.
So what do you think? Are billionaires getting out before the next crash, or is this just a routine move? Are we heading into a major economic downturn, or are they just shifting money into AI and emerging industries? And most importantly, if the richest people in the world are selling, should you be worried? Here's my take on all of this. It's very rare that the smartest people and wealthiest people in the room are all making one move, and that move is to sell, and they're all wrong. Usually, it's when the masses are all buying, the wealthy are selling, and when the masses are selling, the wealthy are buying. Here's what I think is going to happen. I think something very big is going to unfold inside of the U.S. economy. If you look at how much money has been printed over the last 5 years, what happened with interest rates going from essentially zero to where they are right now, a $2.7 trillion wall of commercial real estate debt that's refinancing over the next 2 years. $1 trillion of debt in just multifamily is refinancing this year. As inflation soars and home insurance is going through the roof, property taxes going through the roof, consumers really tapped out. These billionaires are looking at their stocks saying, hey, this stock has went up 5X, 7X, 10X over the last 5-6 years, 10 years. I'm going to take some risk off the table. And I think this is what they're doing. They're taking risk off the table to position themselves for a severe economic crisis ahead. And I believe these companies, these very large companies, they're going to do extremely well. They're likely going to lay off
listing your house
many employees and lean into automation, robotics, technology, AI, generative AI. I mean, the world is about to change, and these billionaires are getting ready. They realize consumers are not likely going to spend like they were in the past in the distant future. And so they're getting ready for something really big. On January 20th, 2025, the global energy landscape experienced a major shift. President Trump announced a national energy emergency to expedite approvals for energy infrastructure, including nuclear power. His pick for U.S. Energy Secretary, Chris Wright, has emphasized that nuclear energy will be a core part of the domestic energy strategy. Just across the U.S. border, Canada's Athabasca Basin is home to some of the richest uranium deposits in the world, with Canada poised to become the world's top uranium supplier. Today's sponsor, Mustang Energy, stock ticker MECPF, is focused on securing a key position in this booming market. Why uranium? Why now? AI, data centers, EVs are driving electricity demand. Tech giants like Amazon, Alphabet, Oracle are investing in nuclear energy. Uranium spot prices are down 36% from their peak, a potential opportunity. Canada's uranium output is projected to double by 2035, ensuring a steady fuel supply. Mustang Energy's key projects in the Athabasca Basin, Ford Lake near Kamikos, Millennium and Denison's Graphon deposits, Cigar Lake East, and Rough Rider South, close to Cigar Lake, one of the highest grade uranium mines. Yellowstone, south of Fission, uranium's $789 million acquisition by Paladin Energy. Dutton and Spur, underexplored, high potential uranium zones. The uranium market is facing a severe supply shortage while demand skyrockets. The U.S. heavily relies on foreign uranium, increasing the need for secure North American sources. Mustang Energy is working with industry leaders like Axiom Exploration, DeRogue Geological, and Sky Harbor Resources to develop key uranium projects. This video is sponsored by Mustang Energy, but don't just take my word for it. Check out all the details with the link below and decide for yourself. Now, I believe these billionaires are going to invest in a variety of different things. It could be...
Yeah, I think they're taking some of the bread out because they do want to, invest in other stuff. But also they are aware that there's a lot of things happening and a lot of shakeups happening. So they want to protect the capital. Like, it's as simple as that. As well as, they got lifestyles to maintain. Oh, I don't know, man. It's a lot, and it's a lot of bread. So definitely expect the stocks that they were in to react. At the bare minimum, I say know that.